Okay, welcome back. We're live. So everybody can see my screen, right? Yeah, I think everybody can see the screen. So before diving into the next week, we always check we do a pre-analysis of the market of the specific pairs that we go and look at and trade during the week. Have a genuine expectation of the week and also allow ourselves to be flexible if the market conditions change. Okay, when you look at my watch list, I only have GBP USD, I have Worldcoin USD, and Euro GBP USD. So the only pair that I actively trade in there is GBP USD. Euro JPY, I actually look at it as another pair, but I don't actively trade it. But in this video, I'm gonna give you a breakdown of GBP USD and Euro JPY. Okay, Worldcoin also is on my watch list, but it's not necessarily for trading for trading business. Worldcoin is an asset, so I use Worldcoin as a new crypto asset that's coming up, and I'd be willing to invest more into it in the future. So I also just have that chart of Worldcoin on my um on my screen so as to tell me when the stocks are buying and or when the stocks are selling, and also show me where the prices of Worldcoin is. So I'll get into it. We'll start with GBP USD and we'll start from the monthly time frame, and I'll also go as far as 3 months time frame. So my screen is already marked up, but I'll just take you through the thought process how I marked up that screen. Okay. Well, let's just start from the 6 months. So what I'll do is something we call top-down analysis, which most of you are familiar with. So I use top-down analysis in relationship with price action. So price action to me is the current state of price at that point or that given time. That's how I look at price action. So don't get me wrong, I'm looking at the price action of that day. I think we're clear. But before I do that, I also analyze from the monthly, weekly, and all that. Okay, as you can see, this is the 6 month range. From the 6 month range, I'll just use this tool to show you more of it, like to make a clear pattern of what we're doing so that you all can't be confused, right? So let me show you something. I'll leave this pattern right here, this polyline. Okay, as you can see from the 6 months, we came down. I hope everybody can see the lines that I'm drawing. We came down, went slightly back up right there, then went down, then broke above it, went down, went up but we didn't break above it, went down, broke below the low, then went up, broke above the high, respected the low but not for too long, then went till midway. I think that was a fractal nature of the market, then traded low. So from the 6 month view, we can see like we're in a constant downtrend, right? We traded lower, came up, traded lower again, went up, and the last move is the swing low. As you can see, the 6 months tells us that we're in a constant downtrend. So the price moved from right here down, up a little bit, down, up, down, down, up. Then this low broke through this low. So the 6 months tells us we're bearish. But it doesn't mean that in the daily or weekly or monthly we're bearish. You understand? That just gives us the general overlook. So from the 3 months, let's remove this since you already know what I'm saying. In the 3 months, we move to the 3 month. Go to the 3 month. as you can see, the 3 month is almost basically the same of painting the picture of what I just told you. So we went up. Let me just show you a bit. We were here, went up, down, broke above it, went down, went up, but respected that level, then went down. I think it was tapping into a 6 month order block or something. Then went down, up, down, up, failed to break above, one little bit down. So then there, then down, right there, down, 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 and here, this is the previous high that was responsible for the break of structure. As you can see, okay, as you can see, I've labeled this place as my 3 month range. Let me just get rid of that. This is the place that I'm talking about. As you can see, this is my 3 month range. Whereby, what I mean is, we went up, respected this level, then broke past the 3 month range, and we like consolidating in the middle. So this is my 3 month range, as you can see that I labeled over there, and we in a 3 month downtrend, but in the middle. We don't know where we will actually go. Then we move into the monthly structure. As you can see, we're moving from the highest time frame to the lowest time frame, slowly building up the overall narrative, so that when we're in the daily, we actually know what to do. And I'll show you my 3 month range actually very well right here. Let me just put it above so that most of you can see. You can see I labeled it as my 3 month range. So this is what I mean by that. As you can see, we were here, went up, traded down, there, went down, up, but we respected that level. As you can see, we respected this level, then traded down, and here is where we are. So that range between this and this, these are 3 month range. Do you know where we say that it takes a lot of money to break structure? And that's why I'm telling you this is my current swing range. Okay, hope we understood. So we move into the weekly structure. So actually this tool that I use is just for the one to give us clear market mapping, you understand? But we don't use it. It ain't an indicator, it ain't nothing. It's just a tool like the trend lines and all that. So when we look at the weekly, we've been constantly in a what? A bullish momentum. As you can see how we have analyzed the chart from the top to the down, right? Just the top down analysis, right? So this is what I mean in the weekly. I know in my head that we broke structure, so that is so vivid in my head. You understand? So I know the 6 month, 3 month, and the monthly is bearish. So if there are good bearish moves in here, we're gonna just take advantage of them. So you can see we went there. So this weekly structure is either the pullback of the monthly, 3 month, or the 6 month, or is actually a shift in structure. We could just go also bullish all the way up, but we can't keep that in our head unless the market shows us where it's going. Help you understand? Okay, as you can see, we made a series of higher highs, and we now in this weekly range. As you can see, I had the monthly range, now I'm in the weekly range. My weekly range is this after this break of structure, and this is the lowest point that led to the break of structure. So as As you can see, this is my weekly range. Okay, so that you know the weekly is bullish. Though it has been consolidating since December, we can move into the daily and see how we can utilize that. So again, we're just gonna delete this tool. It's called a polyline, so you can use it to map out for clear mapping. So we go to the daily. Let me just as you can see, we're in the daily time frame. What does the daily show us? We've been in a constant uptrend, then we went into a consolidation, then we broke above the consolidation, and now we're bearish. But are we really bearish, or it's just a pullback for the bullish momentum? And that's why where I come in and analyzing. So I use this polyline again. Okay, I use this to be more accurate so that when I'm placing a trade, I actually do know what I'm doing. You understand? So this is what it is. From here, let's start from here. We trade it up, down. We trade it up again, down. We trade it up, down. Then we consolidated over here for a while. I think we consolidated from November last year to December. Then January 24th we broke to the downside. And when it broke to the downside, here's where I took those huge sales, those huge buys I told you about. So, and this is where I marked out my daily range. So after there, we went up, and now we're starting to come down. Okay, so here's some real source. Okay, and I'll also explain to you why a lot of people are buying last week and the sellers took over the market. Okay, as you can see, market went up, went down, went up, down, up, down, up, down. As you all know, in a trending market, if it's a bullish market, it should create a series of high highs and high lows, right? So after here, it broke through this structure and this structure. Now our current swing low is this one, and since it was responsible for the break of structure, we assume it is a strong low. You understand? So this was our range. Understand? So my previous range was between here and here, because this was the nearest swing low. But as you can see, when price pulled back around here, we saw that bullish reaction right here, and that's when a lot of investors try to buy over the market, and that's why I tell you, news could be a manipulation. This green candle on the daily right here, this was a news candle, and this other one was a news candle. So what happened is, it shows us that this low was not going to hold, so it broke through. And if it broke through, most likely it's going to break through this. But this is still a swing low. If we get a confirmation that the price is going to trade high, we're going to trade high. But if we don't make a good confirmation, we're just going to trade low. Understood? Yeah, I know you understood. So this week, what we'll be looking at is either if it's going to respect this strong low that broke this high. As you can see, I already I usually as you can see, I usually mark the structures and label what I see. As you can see that I saw this and wrote here the strong low which broke structure. But in my head, I also know that he didn't respect this low, so it's more likely that this low going to fail. And why is it going to fail? I'll show you why. This is the only reason I'm going to trade lower, and you'll prove to me after next week, bro. Pay attention closely, bro. Pay attention. I'm giving you some real hack right here. Bro. This is the only way we're going to trade low. So this big move right here, on the monthly. Yeah, it's on the monthly. As you can see, this big huge candle, and it closed above but didn't break the structure over. So most likely, the bullish momentum is over, like it's weakening. So it has to come back to retrace and also like gain more liquidity to push up. As you know, the market is like a car. You know, a car needs fuel to move, and the fuel of the market is liquidity. So if the market is trending up and liquidity dies down, it has to retrace back to the original point to gain more liquidity and to trade upwards. So I think you understand. So the only reason I know that I'm going to be selling this way is if it's targeting this monthly a balance right here, or what my friend Marsh usually says is the order block. He looks at it like this. He looks at it like this. He calls this the order block. That space between there and there. You understand? That's the order block he's talking about. That's the order block he's talking about. But me, I look at these as an imbalance whereby I'll be waiting for a reaction right away. I'll be waiting for my reaction straight at the bottom, of which is the same concept, but we're just looking at it differently. But here's what I mean. I'll be waiting for this point to be mitigated. You know, when it mitigates the end of that, when it just starts here, I know it has finished through the order block, just passed through the order block, but it wants to break through here. So this will be a most confident place to buy my orders from. The weekly range tells us we're bullish, but you can see if it's within the daily, we need to tap in here, then go up. It doesn't mean that we're bearish. We could still be bullish, but it hasn't break the weekly structure. So it could just be looking for seeking more liquidity and trade above. So I think you've understood. So let me just get out of this and scaling into the daily structure and show you more. After this, I'll just do a little bit of WorldCoin analysis, which is this new cryptocurrency that is coming up, and it's trading at currently 1500 and a WorldCoin, I guess that's around 10.5 USD. Okay, I'll get back into that later. So I hope everyone can see the screen, right? Let's jump down to the weekly. Let's jump down to the daily time frame. Okay, this is what I want you to see in the daily time frame. As you can see, I think I've made a perfect explanation why we traded downwards, and that was because of news and all that. So if it's a bearish move, we're gonna look for an imbalance in the 4 hour, 2 hour, 1 hour, and 30 minutes. If there's an imbalance that will show us it's going to trade downwards, that's why we'll be waiting for our positions in the next week. It can happen any day from Monday to Friday, but the good thing is the best of traders are always patient to wait their moves and execute. Okay, so let's look. It has already broken this structure, so we're going to look at the place that was responsible for the break of structure, and that is, in my case, I look at it as that manipulation of that news. You understand? The news that happened on Wednesday. This is what I mean. We came down till here. It was to respect this low. Then what happened? It showed a little bit of reaction. Then down to downward. So from the beginning of the from the bottom of the reaction to the top of the reaction, that's my overall point of interest, which I want to see the price tap into it and see how it's going to react to it. And that's how simple it is. You understand? So simple. Okay, let me just mark up that. And as you can see, I'll mark it up on the daily, though as I trade inwards towards the smaller time frame, you'll realize that I'll be reducing that box because I know exactly where the price is going to tap to. You understand? Okay, I'll mark that region from there to there. What I said is from the beginning of a reaction to from the bottom of the reaction to the top of the reaction. That's the whole supply zone that I'm looking at, because that's where